We're joined by Westpac Chief Economist Kelly Eckhold. Kelly, why did mortgage rates rise even as the OCR was cut, and what broke the transmission mechanism?
Well, the Reserve Bank's rate cut was well anticipated. But what wasn't anticipated was that the Reserve Bank called time formally on the easing cycle. And running into that monetary policy statement, financial markets thought there was a chance that there might have been a further interest rate cut coming, perhaps early next year or perhaps towards the middle of next year. But the Reserve Bank really poured cold water over that. The governor said, for example, that there was a high hurdle to be breached before you could expect another interest rate cut. So, markets were surprised by this, and they've had to reevaluate what the risk profile is for medium-term interest rates, given that there's no more cuts really in the likelihood. That raises the question of when will rates start rising and how much will they increase by? And that's why we've seen rising medium-term wholesale interest rates, things like the 2-year and the 3-year and the 5-year swap rate, all gone up by 50 or 60 basis points over that period. And that's had the impact on mortgage rates because that's the interest rate that we use to fund ourselves so that we can lend that money for those sort of terms.